So today I'm gonna go over a few things for you guys that you've been asking me about, and just giving some clarity about a little bit more information on how to trade, what to trade, and chart patterns, and also when to trade these chart patterns. Not just showing you or telling you about chart patterns, but actually telling you when to get in these chart patterns and when to get out. I told you guys that about the hedge funds and the market managers. Those are the people who actually control the market, right? So let me give you guys some examples, and I'm also going to teach you about some news and how it affects the market. I'm gonna give you guys a few examples. All right, so first example, news. I'm gonna go over news first. Where's my face? You guys don't really need to see me for this, honestly. I'll cut the camera off for now, or I'll leave it on. It's not blocking anything. All right, this is Apple. Perfect example of how you need to just pay attention to the news and everything that's going on. Now, some things are more important than others. Some news, when it hits out, when it comes out, you think it'll hit and you think that it will have an effect on the actual stock. But some news, they have weights, right? They have different weights. Some news weighs more than others, right? So here's an example. Tim Cook to join Trump at the White House for Apple investment announcement. That's big fucking news. You have the CEO of Apple meeting up with the president of the United States to make an investment announcement about Apple. And as a result of that, the White House invested $100 billion commitment for Apple. Right? That's going to be big news. That's big money being moved, and that's going to affect the stock. As a result, Apple rose almost 6% on the day, $11.64 to be exact. That's a big move, right? That's big news. It's a big move for the big news. You want to be ready for moves like that. If that happens intraday while the market is open, you want to take calls, right? You want to make sure you're at your level, make sure you're plotting your supply and demand levels and your support and resistance levels, but you want to be sure that you catch a piece of that. If you're in equity, it doesn't matter that much. You're buying and holding for 5-10 years out. But for options, you definitely want to hold that. You definitely want to be ready to play that based off your supply and demand levels, right? All right, so example number 2, Airbnb. The travel rental company saw shares falling 6% in pre-market while its second quarter results beat analysis expectations. The company is forecasting a weaker second half of the year. So the forecast of the company is reported weak earnings. And that's another thing, like a company can beat earnings, beat expectations, and also still take a dip, right? So that's why you don't really want to play earnings, because you can be right about everything and it still takes a dip. Or if you're in puts, you can still be right about everything and the stock moves higher, right? But that's why we don't play earnings. We don't, because it's really a game. So we don't do that. But here's an example of Airbnb. It beat analysis expectation, but it forecasted weaker earnings second half of the year. That's bearish news. So as a result, Airbnb was down 7.58%, or $9.89, almost $10, right? So I would be looking for, and I put the chart on the right hand side to see exactly what happened. I would be looking to take a bounce at that level that I have there, at that 113.71 level, or the 114 level. This is how news affects the market. I need you guys to understand this, because once you understand this, you can actually start playing and taking trades off of news, and you can make yourself some money doing this, right? Here's example number 2. Let me see. Let me go give you guys some more examples. Number 3, Intel, right? Intel shares drop after Trump calls for CEO to resign immediately. This sounds silly, right? But this is just how it works. I don't make the rules. I just play by them. As a result, Intel was down 3%. And it's not a lot. It's not much, but just showing you how the slightest tweak, the slightest bit of news can affect stocks. So on the very right here, I showed you exactly what happened. This happened, it looks like this happened after hours. I'm gonna start putting the times on these. I don't remember what time that was. Pre-market. This is pre-market. So the blue is post-market. The yellowish, tannish color is pre-market. So this happened right before the market opened. We saw a big drop here. It kind of reclaimed here at this 2040 level. Then it dropped more, made a lower high, and it dropped more, made a lower high there into the $19 area, right? That's Intel. So we had 3 examples. We had Apple, we have Airbnb, Intel example. Here's another one, United Health, right? Are you gonna reload? Wow, this is really happening. Hold on. So this is what it's supposed to look like. Warren Buffett's Berkshire Hathaway reveals new stake in beleaguered insurer United Health, ticker UNH. I think Warren Buffett purchased like $5 million worth, I believe. Don't quote me on that number, but I believe it was somewhere around that area. And he had a stake in United Health, and because of that, it rose $25 after hours, and I believe it even got up in the 300s the day after. So whenever somebody, hedge funds, big corporations start pouring money and buying large amounts of stock like that, it's going to react. And great investor Warren Buffett, I think he put like $5 million in it, and as a result, basically, and you want to find beat up stocks, right? So you want to find stocks who have been beat up, who are undervalued, 30 or below on the RSI, which is the relative strength index. But you want to make sure that these companies, check their financial statements, because you want to make sure that they are making money hand over fist for the next 6 years. If they've been making money for about 5 to 6 years. And normally the numbers that you see, I normally go on the Yahoo Finance. You can just check their financial statement. Remember, all of these companies are publicly traded companies, so you can check their financial statements and see if they're making money or not. And you want to find companies that are beat up, but they're still making money. And basically, you just want to go long on these companies. That's really it. People think that it is really this complicated thing of how to trade, and some aspects of it are a little difficult, but you want to long at demand and you want to short at resistance. The easiest thing to do, the easiest way to put this is to long at demand. So I'm going to show you guys like a chart. All right, so I'm in MVO. I'm long MVO, but I'm going to tell you why. Go to the weekly chart here. Right? So MVO has, these are the levels that I have on MVO. First and foremost, I want to find all-time highs. So MVO at one point was trading at $148.57, which you see here. $148.57, right? So I also checked their financial statements way before I even jumped in this play. And I saw that they were making money hand over fist, like billions of dollars per year, tens of billions per year. And they've been doing so for the past 6 years. And their revenue continues to grow, right? So they're growing as a company. The stock is just beat up. The stock is not the company, and the company is not the stock. Always remember that. I'm gonna say it one more time. The stock is not the company, and the company is not the stock. So you want to make sure that all the information that you need is on these charts. So if NVO if it was once trading at 148.57, which is here, and it's now September 26th of 2022. How do I know that? I'm looking here at the very bottom. So I find out where price action was trading at, and then I go to the very bottom right here, September 26th, years 2022 here. Last time it was trading at this level was here, February 22nd, 2022, and then January 24th. 2022. It's 2025 now, so MVO is trading at levels not seen since 3 years, which means that there are still buyers at this level waiting to get filled. On top of that, you want to make sure you have multiple confluences, right? So the first confluence would be it hasn't been trading at these levels since 2022. That's very important because there are buyers still sitting there. The second thing is you have bullish divergence, which is here, this line that I made here. Let me scroll, zoom in some, and here the RSI. So what happens with bullish divergence is that these things meet. So you have the price action, which is going down, but you also have the RSI, which is coming up. So what happens is the price action goes down, the RSI comes up. This is the best way that I can kind of explain it, right? And when these things they go the opposite way. What's the name of the video game where it's like a bouncing ball, basically? Look at it as a bouncing ball. When these things hit, they go the opposite way. Bam. And then they start going their opposite ways. And bullish divergence, let me show you guys an example, right? So what is bullish divergence? If it will show me anything on it. That's not really a good example. This is what they don't teach you, and it's not much of it on the internet. That's why you have to be careful about where you get your information from. Okay, so this explains it, but it doesn't. I was trying to give you guys like an example of an actual picture. So in the context of technical analysis, a bullish divergence occurs when a security's price makes lower lows, but a momentum oscillator or indicator makes higher lows. This disparity signals that the downtrend in the price may be losing momentum bottom and that the potential upward reversal or a sideways trading range may be on the horizon. You want to make sure that you're always trading A+ setups, right? The way that these things become stronger, so bullish divergence is already a high probability setup. On top of that, you have it trading at lows that it hasn't seen in 3 years. So you still have buyers at this level that it's currently sitting at, which is that's two confluences, right? And the third confluence will be because this company is making money, it is a higher probability chance that this pattern plays out like it's supposed to because the company is making money. If the company is not making money and I see bullish divergence on a daily or a weekly or a monthly chart, I'll still take it. I won't put as much size on it though, right? Because the company's not making money which means that it can still play out. It still has a chance of actually playing out, but it's a lesser probability chance of actually following through. That's what I'm trying to say. But yeah, so that would be the third confluence. So I would take this 1000%. Absolutely take this 1000%. Yeah, bullish divergence on the weekly chart, that's very, very strong. And I just wanted to show you guys like some examples of how the news affects these stocks. If you guys have any questions or concerns or anything, let me know. I hope this helped. Make sure you pay attention to the news, right? Just pay attention to the news and everything that's going on and just see how the news affects these things, right? For an example, I'll give you one more example. American Airlines or Delta Airlines or any of the airline companies, right? Let's say a plane goes down, a plane crashes. Whatever company that happens with, pay attention to the stock when that happens. If a crash happens, a big crash happens, pay attention to American Airlines or Delta Airlines and see exactly what happens to that stock. A deadly event like that will definitely take a toll on the actual ticker, the actual stock. So just pay attention to things like that. And I will see you guys in the next video. Let me know if you guys have any questions or concerns. Just message me in the Discord and I'll see you guys then.